Yo, what's up, guys? It's Trader X again out in Soweto. So, welcome to it. Welcome to this isn't really an update that I didn't plan on doing, but thanks to this guy, Tulani. Special mention to Tulani. Guys, just before I go ahead and give you this update, I just want to say that it brings me a lot of joy to see that there are quite a lot of you guys that are putting two and two together and understanding what it is that I'm trying to teach you or convey to you, right? And it's a kind of change of pace to see that you guys are actually understanding, taking all this information, absorbing it, and understanding it and using it. So yeah, special mention to you, Tulani, for that. And so because of that, I figured, you know what, let me just go ahead and give you an update based on that trade that I took on Friday. Now, before we go ahead, guys, excuse the background noises. That will be my son and his friends playing outside. So but yeah, that comment on my Instagram made me, want to do this update and get it out to you guys. All right, so let's get into it. So on Friday, I took a trade. Like I said, I uploaded it. I uploaded a video that I took on my cell phone. That I took on my cell phone. I uploaded it to my socials. Just to illustrate that, all you can do as a trader is just trade the plan, and that's just basically it, right? So in case some of y'all were in the dark about the trade itself, here goes an update real quick. So on Friday was this candle here, right? On Friday, I was very bearish. I was very, very bearish, the GBP USD, right? And that is thanks to the previous candle, which is this this bearish candle here to the left, right? This candle took out the previous day's low but never went for the previous day's high, right? So that's like a change in events, considering all the other candles that came before it, right? All of which were just breaching the previous day's high as opposed to going for the lows, right? And then all of a sudden this one came up, taking out the previous day's low and not going for the previous day's high. To me and to you, this would be a great day, and this would be the day that gives us the direction for the following day. And the following day just so happened to be Friday, right? Yes, I know it closed bullish, but when the market opened, it gave me an opportunity to jump in on the trade itself, right? The market opened round about, that's 9:45 right here. The same candle where the market opened, euro session open, that's the one that filled the order, and then down she went, right? So like I said, I was very, very bullish, very, very bearish, right? So what I did was, as soon as I saw price action break, the price action break that I saw here, short term on the 15, this would be the chart on the left, short term price structure break was right down here, right down here. So that's an old low, and then there's another one just slightly above that. I'm sure you can see it, I don't have to note it. But when I saw this break here and I saw price start to move all the way back, retrace, I went ahead and I put on my trades, put on my fib first, obviously, and then put on my trades, and I got a perfect entry at the 62. So market opened, price picked up my order, one of my orders, and down she went. Now in the video that I've been telling you guys about on my socials, if you follow me, about taking profits, I go into detail in terms of using the fib and taking the profits at a particular level, really, right? But I go in depth in terms of that. So what had happened here is, let me just explain real quick. What had happened here is, after it took my it filled one of my orders, the 62, I got rid of the other two, right? Because I don't need them. My plans was really to take profit here at the 0, because immediately if one of my orders or many or all of my orders are filled, I have to take profit at the 0, and then I'd leave some as runners. Hopefully, price would actually reward me in that manner. But usually I would leave runners. I'll take some off at the 0, either one or two of the trades, and leave just one, or part of, in this case the 62 was filled. So what had happened here is, I wanted to take a piece off of the order that was fulfilled on at the 62, right? And yeah, price came in it made contact with the zero, and guys, you want to take your profit here. But I explained this. I go into detail in the next video that I'm going to upload. It's just I'm just busy with that right now, right? It's completed. It just needs to be edited and uploaded. But look out for it in the next few hours. You should be getting that. But in any case, so what had happened here is, and I recorded it before this one here, so I'm still working on it. So please, bear with me here. Bear with me. But anyway, so yeah, Price picked up my order, and I planned on taking my profit at the zero. Price made its way down, as I'm sure you can clearly see from there. It made its way all the way down here, right? And I did not put my stop loss right up there. I didn't put it on right up there. The reason for that is because Price gave me another opportunity to enter right here. But of course, I was never going to enter because I needed to manage just this one trade, right? I didn't need to jump in on another trade whatsoever. But anyway, Price gave me another opportunity at this red block here. Gave me another opportunity to jump in. And I figured, you know what? If Price retraces back into this hot zone, chances are it's going to continue on down. But I was hoping that Price would actually continue from there, break the previous swing low, and then continue to go all the way down. But yeah, it's fresh out of luck, right? And this is really what's going to happen more often, right? When Price is ready to either continue a move or reverse, this is exactly what's going to happen, guys. You will jump in on a trade. Once you jump in on that trade, it will give you a bone, but it will be up to you whether you're going to be banking some money or if Price is going to take your stops or your break even. So you have to manage that, guys. You need to find a balance between paying yourself and not paying yourself whatsoever. So my advice to you guys is, whenever you go into the markets, find a way to get paid first, and then whatever you're going to gain thereafter is just, you know, a bonus, really. And that's the reason why I get out at the zero, right? So this here, guys, is just a pure example of what happens when Price does not behave or doesn't do exactly what it is that you expected, right? You need to cover your ass, guys. Simply put, you need to cover your ass, because as soon as Price left my hot zone and filled my 62, what I did there was I moved all of my stops. Well, I moved one of my stops, which is the 62, to break even. When I moved it to break even, I knew that should Price make its way all the way down to zero, I'll take part of my order off, and then I'll leave my break even still up there, just in case something happened. And in this case, something did happen, right? Price pulled back. Price pulled all the way back and took out my break even. And as I'm sure you can see with this dotted line here, that was the remainder of the order. That was the remainder of the order. And as you can see, I entered here to the left at my 62, which is right up here. I took some right down here. I took some trades off right down here. Now, when I took it off here, I was a bit distracted because initially I was supposed to take profit right here, right there. So this candle here, this bullish candle here, was the one that was supposed to, this bullish candle here, right, was the one that was initially supposed to you know, tag my stop, and I'd be out at my zero. But I was, like I said, I was distracted for about, what is this, 30 minutes, and I took profit right at this candle here, right just before it closed. I took my profit right there, and I called it a day, really. But like I said, I watched as Price, you know, continued all the way up to take my my break even. But luckily, like I said, I'd paid myself here, so it was not all a lost day, right? Not all a lost day. So when it came back up to take my break even, I was fine with it, because I had banked, I'd made bank, really, of most of well, a good chunk of my my order. Actually, I took off 70% off. So by the time Price got here, 70% off, 70% was taken off, and then 30% broke even. Right, so this is a scenario of what happens when Price goes the other way. I also wanted to touch on the fact that you know, like I said, Thulani noticed this, and you know, it's a breath of fresh air, really, change of pace, really, to see someone who understands all that information that I've been giving to you guys. So I hope you guys come out you know, and show me your trades as well, in terms of the concept that I've been trying to teach you. or just leave a comment to just show me really that you understand what it is that I'm talking about, right? But what Tulani mentioned here is he's spot on with that. The reason I do not recommend you jump in on retrace moves is because of what happened on Friday, right? What I jumped on here was a retrace move. This is a continuation move to the high side. The reason for that is because if you look left, price has been printing higher highs and higher lows, right? So we can reasonably expect that should price give us what it did here on Friday, right? Let me just do this. What it gave us on Thursday here would be the beginning of a pullback, right at this bearish candle would be a beginning of a pullback. And again, it goes back to what I'd mentioned to you guys. If it is a pullback move, it's not going to be sustained like if it was a continuation move like this one here. Remember this continuation move, I got an entry roundabout here, if I'm not mistaken. I think it was on this candle here. I think I got an entry roundabout here, and I didn't hold on to this particular trade for these 3 days. But had you done that, you would have cashed out. And I mean, look at the move itself. You know what I mean? It's 3 days right after you've entered of nothing but an uptrend. So you could have made a lot of money here, as opposed to this pullback move, attempted pullback move that was botched, really. Right? It could still continue to be a pullback move to the downside. We just don't know yet. But I was hoping that this was going to be a start of a pullback move. But what I wanted to point out is pullback moves are unsustained. They're not sustained as much as, continuation moves. And in this case, I was very bearish on Friday. But, towards the end of the day, price just completely went the opposite direction, taking my break even with it along with it rather. So you can clearly see what happened here, and this is the reason why I do not recommend. And look, you're not wrong in jumping on pullback moves, right? You're absolutely right, because we have to trade the plan at the end of the day. You know what I mean? If the daily chart shows you that this is what you need to be trading, go ahead and trade it. Don't ask questions, just trade like a machine. You wait for price to say we're going down, or your grade A to say, we're going up, down or up, and that's how you're going to trade. Whether price breaks you even or doesn't break you even, or it gives you profit, that is the exact same way that you're supposed to be trading. So even if it goes against you and say you break even or you lose a little bit of money, I just understand that you were trading the plan itself. You know what I mean? So don't be afraid, guys. A lot of you, somebody sent me an email, kind of exhibiting, literally showing me that, they're actually scared to jump in at what they thought is where price has overextended, or possibly, when price has been moving in an upward direction for quite a long time. For instance, what I'm talking about here is, I remember we were on this day here, right? And a setup popped up. This is the setup that I'm talking about. I took the setup as well, right? Where was it? It was right here. I took this trade here. My orders were filled here. But as you can see, price went all the way up, didn't reach my zero, and then it came back to take my break even. This will happen, guys. You need to understand that this is what I mean by trade the plan. You need to keep trading the plan no matter what the outcome. Just keep trading the plan. Look, price structure and price action dictated to me that I need to take this trade because you know what, price is printing higher highs and higher lows. We are in an uptrend. Yes, it was for those 3 days, but we still are in an uptrend. I don't know where price is going to reverse, right? The only thing that I can do is I could trade the plan itself, but in this case I couldn't even break even. I couldn't even take profit at my zero here. I couldn't even take my profit here at the zero, and this is what's going to happen, guys. This will happen almost all the time. So when the markets opened round about here, I believe, was here. Yeah, right here, 10 o'clock. When the markets opened, that's when I broke even on all of my trades. You know what I mean? All of my trades were filled in the early hours of the day, right? In the Asian session, all of them were filled. Price started moving all the way higher until the Euro session opened, where all of my trades broke even. That was okay for me. That was okay for me because that qualified this day as this qualified this day as a great day for me because it went after the previous day's low. Not only that, the first signs that it was going to be a great day was when price took out, when price broke me even at my entry. That's the first sign that something is about to happen or reversal is about to happen. All I had to do was just wait to see if it's going to make good and test the previous day's low, which it did. And that's the reason why I was very bearish on Friday, right? And therefore I had to trade the plan on Friday. Let me just do that. So on Friday I had to trade the plan. No matter what, I had to trade the plan, and I did that. I traded the plan. 62 was filled, and from that 62 I took my profits at the zero. And some of the trade was stopped out at the 62 break even. Right, so I wanted to point that out to you guys. Remember this, it's part of the rules, guys. Remember this. You want to make sure at the daily chart that you which move you're jumping in on. If you're jumping in on a continuation move, then you can have the confidence of holding that particular trade, or when another opportunity presents itself, I'd say 2 days later or along the trend itself, you can jump in with the confidence knowing that, you know, price is most likely going to continue on up. You understand what I'm trying to say? But if it is a pullback, you need to be extra careful when it's a pullback on the bigger time frame, because it's not going to be as sustained as a continuation move. Am I making sense? All right, guys. So I'm done with that other recording in terms of the other recording that I've been promising you guys. It's done. I just need to edit it. Like I said, I recorded it prior to this one. But because of that comment, I figured, you know what, let me just go ahead and upload this one and work on that other one, and then this one is going to be quick anyway, but work on the other one and then now upload it. It will still be uploaded in the next couple of hours, so look out for that. Again, guys, it's been good. Stay safe. I'm out.